So to continue on from my last video, I want to go into a little bit of detail about interest rates. So, like I said before, interest rate is all just a measurement of risk. So, if you have bad credit, you're more of a risk for the bank. So, they're going to charge you more interest to offset some of that risk. So, they make more money off you, especially at the beginning of the loan, or overall from all customers that have credit scores that are similar to yours, then they can afford to have to go repo cars or take losses and write off cars that people are not making payments on. And so the higher your credit score, the less risk you are because it looks like you're going to be paying the loans back better, basically. So the other ways that they look at risk also involve how long it's going to take you to repay your loan, how old the car is, how many miles it has, and other factors like that. So if you have a 2018 or 2019 car, going into 2018, we're going to have 19s already, those cars are going to be less risk because they are covered under manufacturer's warranties. They're going to have no miles on them. So the likelihood that you're going to have a car that breaks down and you're not going to want to make the payment on it because it's broken is very, very low for them. So new cars will typically have better financing rates than used cars. I can't think of any exception except for maybe with certified pre-owned cars. Sometimes the special interest rates that they offer on that can actually be better than the same car brand new. So that's the only exception that I can think off the top of my head that would be different. Now, if you go with, let's say, some lady's car that's got 11,000 miles, like we have a 11,000 mile car, or I think it's a 12,000 mile car, and it's a 2005. It was some older lady that drove it and took really, really good care of it. That car is going to be less risk than a normal driven 2005 model, but it's going to be higher risk than an 11,000 mile 2010 or 2012. And all that plays into how likely you are to get approved, how low your interest rate's going to be. Certain cars, they're almost impossible to get loans on. Once you get past 8, 10, sometimes you can get away with 12-year-old cars. Most banks won't want to do loans on that because it's too much risk. There's too much of a likelihood that that car is not going to keep on functioning. Same thing with high miles. Typically, most banks aren't going to want to do a loan on a car with more than about 125, 135, depending on the bank, 1,000 miles on it. Because, again, how likely is that car going to be to run? So those are all the things that really play into it. So if you're, you have sketchier credit, you might actually be able to get a little bit better interest rate on a new car as long as you get a really good deal on it. If you can get it less than what the bank thinks that car is worth, which is typically the invoice cost, is what most major lenders think the value is, and most credit unions base their value off of the MSRP. Also, if you look at doing a used car, they're going to usually base the value of the vehicle off of whatever retail value is on Kelley Blue Book for that comparable car. So that's something that you have to look at as well, is how much cash down are you putting towards the car? Because that's a huge thing. I missed that in one of my previous videos talking about how to calculate out your payment, which is ridiculous that I forgot down payment in there. But the more down payment you put down, the more likely you are to get approved. I've had people that have, low 500 credit scores that will get approved on loans at really, really good rates because they're putting a significant amount of cash down towards that car. The bank assumes almost no risk once you pay off about 20% of the vehicle's value plus your tax, title, and licensing. Because now that car's 80% loan to value ratio. That's something that, let's say you don't make your first payment, they could take it back, they could resell it and basically make all their money back and more sometimes. So that's something to be aware of, is more cash down, higher credit score, newer car is your best scenario for your best interest rate. There's also some other factors that you have to look into as well, like what type of stuff is on your credit bureau. So if you don't make your payments on your current cars, or you haven't made payments before on your other cars, that's something that they're going to see as more red flag than you making a couple late payments towards a credit card, for example. Because all you have to do is say, yeah, I know I haven't paid my credit card that one time because I forgot it. I didn't get the bill in the mail, something like that. But you can't forget your car payment. That's really essential. If they see that you can't make your car payment at some point, that puts them at a huge amount of risk. And really, all interest rate, like I said earlier, is a measurement of risk. It's how much risk are they willing to take, and at a certain point, they're not willing to take the risk at all. And the maximum interest rate, at least here, is going to be 24.99%. You can't go over, you can't do 25% or higher. That's the highest lending that they'll allow. So once it gets past that point, and some lenders won't even go that high, they just won't take it. So yeah, that's just a little bit on interest rates. It's the first time I'm going to be asking. I know I've seen a lot in my analytics. It's saying that there's a couple people that are watching some of the videos repeatedly. So if you don't mind, if you are enjoying what you're watching, if you would like to subscribe, there's also the bell icon down there. I will give you notifications that my new videos are coming out. I do want to go into some more details about different features and different things that you can do in the car business. I want to go into back-end products, discuss gap, warranties, maintenance, and appearance protection products and stuff. Those will be some videos that I'm planning on coming out with here shortly. So yeah, like I said, if you are enjoying what you're watching, please subscribe. I'll try to keep the videos coming out. I'm trying to do it every day. Probably can't keep on that schedule. I work, 5-6 days a week. But yeah, thank you for watching.